The Taxpert self-employed tax app is a quick and easy way of seeing a complicated analysis of your client's tax and national insurance liabilities. And it's intended to be used for any sole traders or indeed any partners in traditional partnerships or individuals in LLPs. Now, we can see on this first screen that we can initially input the accounting date used for 23-24. I'll go back to that year because of the basis period reform. And initially, I've got an accounting date of 5th April 24. And that means that beneath it, the transitional profit figure is zero. Later on, we'll change that. You can also select whether the taxpayer is subject to Scottish tax rates. That'll change the figures. You might have seen that change bottom right of the screen. Whether they're of state pension age, that affects the national insurance contributions. Again, we saw a change. And also whether student loan repayments apply or not. And you can also change the tax value of losses. If there are losses, they can be valued at 30% or 20 or whatever you like. Now, with the 5th April 24 year end, the basis periods will be the same. And we're looking at 3 tax years only. And we put in the profit figures on a traditional accruals basis, because one of the things that this app will do is show you the effects of the legal change that came into effect from 6 April 24, requiring all sole traders and partners to operate on a cash basis unless they opt out. Many will opt out, of course, but some might not, and there are planning opportunities. So I've put in figures of 80,000, 71, 90,000, etc. And if I then scroll down, we've got the taxable profits on the accruals basis or alternatively on the cash basis. And we can see already there's a difference. The reason for that will come up in a little while. But one of the major benefits, if I scroll right down, is that we get an estimate of the tax and class 4 liabilities with the figures due and payable on the appropriate payment dates. So 31st July 25 all the way through to 31st July 27 if we've put in the estimated profit figures. In addition to the self-employment profits, we can add in any other income for the 3 relevant tax years and any net pension or charitable donations that will, of course, reduce the tax. And we'll have a look at a little more of all of this shortly. But the final point, I think, on this first page is that if you've got a non 5th April 24 accounting date for 23/4, let's say it was 31st December 23, then you will have had some transitional profits. Let's say there were 50,000 of transitional profits that arose in 23/4. You'll have that on file, of course. And you can see here that the 50,000 would have been spread over 5 years, 10,000 a year, but we can accelerate that. You might already have taken 20,000, let's say, in 23/4. So we put in the 20,000, and that will reduce the spread figures for 4, 5, and 5, 6. So that'll enable you to see the effect of taking advantage of the 5 year spreading of the transitional profit from 23/4. I've just clicked that reset spread button and it's gone back to 10,000. I can also up here click reset to 0. Are you sure? Yep. That resets the accounting date to 5th April and zeros all of the profits. The reason why we've got some bizarre figures here is because the cash basis has not been zeroed, and I'm not going to do that because it'll take me too long then to re-input the figures. But let's now put in the original profit figures. I think I had 80,000 and 71,000 and 90,000, whatever those figures were. And we're then back on the fairly sensible profit figures. If we want to see the calculations of tax in more detail, then that's on the tax and NIC spreadsheet. And if I go back to that, we can also see workings for the taxable profit, and that takes account of the accounting dates, etc. Now, final point here, student loan repayments. If I click yes, student loan repayments are due. You can see down here a student loan repayment line came in for 24/5 and 5/6, and the student loan repayment tab enables us to fill in other income, select which plan it is. If it's plan 4, then there'll be a change. You might have seen that happen to the amounts that are repayable. So that's a full analysis or functionality for the student loans. But let's actually get rid of that, keep it simple, and let's now have a look at this cash basis point because this is one of the key elements of this new self-employed tax app. And I will go back to changing 23.4 to accruals basis. The first thing you can see, in fact, is how for each tax year you can select accruals or cash basis. And the point is that for 23.4, you could have been on the cash basis if you were within the prescribed thresholds, I think turnover 150,000, whereas now the cash basis for 24.5 and later is the default basis. So let's actually put that in for each of them. And it's only if the taxpayer opts out by ticking the appropriate box on their self-assessment form that the accruals basis can be used. But on the basis of the accruals profit figures that we've got, 80, 71, and 90, and then on the basis of the opening and closing debtors, creditors, I haven't bothered with stock and capital allowances, but you can put those in. On the basis of those figures, we will automatically convert the accruals basis profit to the cash basis profit and see the difference. And in fact, the difference in 23.4, just focusing on that one, of just £500 is because the debtors go up from 5 to 6, so that's an increase of 1,000, but the creditors go up from 9 to 5, an increase of 500, but the 500 goes the other way from the 1,000, so there's a difference of 500. The cash basis profit is 500 lower than the accruals basis, and you can see how the figures all work there. But let's now see what happens if you had adopted the cash basis in 23.4, but then adopt the accruals basis in 24.5 and 25.6. Slightly unusual, but the reason why I want to do that is because you'll then see that there is a negative adjustment in 24.5 as you go from the cash basis to the accruals basis. If the adjustment is negative, then that will reduce the taxable profit by that negative figure. So the 71,000 is reduced by the 3.5, and the taxable is 67,500. If I in fact go back to the enter data page, that now explains why I've got the accruals basis here for the taxable profit, the cash basis here, and then the mixed basis. So what happens if in fact you chop and change between the cash and the accruals basis, and that's picking up the figures that are in this taxable column here. But it could be that the adjustment is a positive adjustment. Let's suppose that you go onto the cash basis in 24.5. By the way, there, if you go from accruals to cash, the adjustment figure has to be added. Here we've got a positive figure, and that puts the profits from the cash basis 70 up to plus 3.5, 73.5. But then when I go to the accruals basis, again, I've got the 2.5. It's not actually doing what I wanted it to do, but never mind. What I'll do is change one of the creditors figures. Let's zero that 10.5 and see if that does it. And it does exactly what I want. That then tells me that in 25.6, going from cash to accruals basis gives me an adjustment to add of £8,000. So if I was on the cash basis and I go to the accruals would be 90,000, but I've got to add 80,000. Now, as it says up here, when leaving the cash basis, the accruals profit is adjusted as appropriate. If it's negative, it'll reduce. If it's positive, it will increase, but can be spread over 6 tax years. And the minimum that we must take is the 1/6 automatically calculated. So I would then have to add in £1,333, and that would give me the adjusted figure. And what is quite interesting is that if I add together the three taxable profit figures on the basis of adding in that, they will come to less than the three accruals basis figures. But of course, that's because I'm carrying forward to be taxed in the future 6,667. If you've got figures that are too large for the, let's suppose accidentally here I put in a very large figure, you can see we've then got some hash columns. Well, if you ever get that when using any of our apps, just click on auto fit and that will automatically widen the columns to fit that. Reset to zero, what that does is reset all of the debtors, the cash to accruals adjustments figures to zero, but to reset the profits, I would need to go back to the enter data, reset them to zero, and then everything there is now zeroed. Again, if I put in some profit figures that are too high, so let's suppose I put in one, two, again, you get hashes, just click auto fit. So there it is, a fairly significant reset to zero again, because they're silly figures, tool for working out the way in which the basis period reform continues to affect clients, but also the way in which the switch to the cash basis can have an effect, and how you can, in fact, adjust the taxable profits, some would say manipulate the taxable profits in certain circumstances to give a cash flow benefit to your client.